Youssef Al-Shamari, CEO CMarkits. Good morning, and thank you so much for joining us, Youssef.
Good afternoon, Alexander, and I'm very pleased to join you.
Very happy to have you on the show once again, and a pretty important day, by the way, the day ahead of OPEC meeting, which is a long-awaited OPEC meeting once again after this incredibly positive performance of the crude oil, both benchmarks in January. Do you think that this performance could be repeated in February?
Well, thanks for having me. Well, we have seen last January has been the best, perhaps the most bullish month for crude oil prices for more than 7 years. We've seen the prices exceeding $90, something that we have not seen since 2014. And I would like to highlight one thing, is that our forecast has been already that we can see $90 in the first half of this year. This has been accelerated due to the geopolitics. So we have seen an unusual situation between Russia and Ukraine. And as you know, Russia exports more than 4.2 million barrels. And if the United States is going to sanction Russia, then we could see more than 4 million barrels off the market, from the supply market. And that has been pushing prices to unusual levels that we haven't seen for 7 years. Now, we're coming to February, and for Q1, let's say overall in this month. I would say here, there's another factor that can keep prices high. That is the undersupply from OPEC+. Just the meeting that from the JTC, the Joint Technical Meeting that we have seen today from OPEC+ itself, has shown that there is more than 8,000 barrels that were not supplied in December. So, in fact, the OPEC has only delivered just over 50% from what it has promised to deliver. And if that continues over the next months, I believe we could see prices going up, keeping high, and there's no reason why it can't keep going, even perhaps reaching 3 digits, and at some point in the first half, as predicted by some investment banks before. And one thing here is another uncertainty factor is, if OPEC+ is going to go ahead and ramp up production by more than 400,000 barrels, and this is a possibility, again, it could mean that you could see some members who have spare capacities, that could include Saudi Arabia, Emirates, perhaps Kuwait or Iraq, that could increase. They will increase their production more than the current quota. But still, the problem is not fully solved, because it will not deliver all that promise that they will be actually agreeing to pump. Let's assume, for example, they go to deliver to pump, let's say 800,000 barrels, more than double to 400,000 barrels. Still, I believe we could see 50% of that from the supply missing from the markets. But it will certainly keep the prices up or reduce the speed of price rise.
Yeah, I was wondering, in regards to the OPEC meeting, do you think that they're going to stick to plan increases? Well, I mean, is it reasonable considering prices?
Well, under the current conditions, I don't see a reason why they will go to increase their production by more than 400,000 barrels. They have an agreement that has been working, and we have seen statements from the Saudi energy minister just a couple of weeks ago saying that Saudi Arabia will not compensate for missing supplies from other countries. So let's say, it is, in my view, it is less likely that they will go up by more than 400,000 barrels. And just another factor here is that which could keep them also sticking to the agreed plan, is possibility now we're seeing some economic slowdown from China. Just look at, I saw Brent prices just a moment ago, and they were less than $90, trading at around $88. And I believe here the China situation is important, the real estate crisis in China, and the possibility of Chinese economic slowdown in 2022 may also keep the group a bit cautious when ramping production by more than 400,000 barrels.
Youssef, I was really wondering, do you think the prices rally that we saw once again for both benchmarks, but if we had to focus on US benchmark, which is the WTI, do you think that this rally might revive the shale oil producers?
That's a possibility, yes. So we could see US production picking up. And if we see the latest readings from the EIA, from the United States administration information that production of the United States is almost 12 million barrels. And if prices continue to go 3 digits, I believe we could see shale or the United States production above 12 million barrels, especially if the U.S. administration is willing to keep gasoline prices down. And I believe possibly the U.S. Production or the strategy within the U.S. production will be revisited, and we could see a ramp-up production from the United States.
In final take, you just mentioned the geopolitical tensions. I just wanted to highlight the Russia-Ukraine tensions, which are automatically Russia-US tensions, if you want to call them like that, or the NATO countries, not only, of course, the United States. I was wondering, do you think a military escalation of the conflict might have a negative impact on oil prices, or it's just regarded to the natural gas? Certainly, natural gas is a huge factor over there, specifically for Europeans.
Well, certainly any geopolitical escalation or military intervention now between Russia and Ukraine will certainly lead to an escalation in prices, because you would see the United States sanctioning Russia, and that means we could see a supply shortage by slightly more than 4 million barrels. In addition, also gas supplies from Russia could also be at risk, and that means there could be more switch to oil. So I believe it can lead to a major supply disruption, and that could send the prices to 3 digits if that situation or that scenario happens.
Thank you very much. Youssef Al-Shamari, CEO CMarkits, thank you for joining us. Have a great day ahead.
Always a pleasure, Alexander. Thanks for having me.